I think we're going to just muddle around in here for a few weeks while we prepare for first quarter earnings. Though I actually think the market is looking past first quarter earnings. Even with the pre-announcements, we've seen stocks get pummeled and then they come back. So I think what we're looking for is resurging global growth. And I think that's what the market's waiting on. A little bit of trade talk and a little bit of when is this whole thing going to get restarted again and led by China.
Mike, if you look at some of the outperforming groups of the quarter, we've done this exercise, but it does pay to emphasize technology came back very strong in the first quarter. What does that tell you about the environment?
It's interesting because some of the sectors that worked really well really only worked well up until March, and then it shifted. But technology was strong throughout, right? Because technology can be a risk-on sector. We see the end of the semiconductor cycle. The semiconductors ran really hard. Or it could be a big quality growth stocks that are reliable and they're going to be able to grow cash flows even if they're expensive. That's what worked in the second part of the quarter of the last couple of weeks. So I do think technology is a little bit of a hybrid in that way. But the other stuff that did work was defensive in the last month. Energy got all of its gains for the most part in the first two months. So the quarterly scorecard doesn't so much tell you what the tone was exiting the quarter, which was a little bit more an equality and stability bias versus risk seeking.
And when we say technology performed the best in the quarter, I mean, we should note it's really the chip names that drove the action. I'm talking about 30-40% gains over the last 3 months, and Xerox Corporation, which also had a very strong quarter, up 60%.
Tech now is tech hardware, okay, when they shifted around the sector. So it is Apple at something like 20% of the sector, and then it's all the semiconductor stocks, absolutely.
Tony, when you look at the fixed income market over the quarter, do you feel it was risk on, risk off? What was the main driver?
Well, certainly you saw risk on, particularly in January, if you look at the recovery you saw in the high yield market. You mentioned it was such a strong equity quarter, and in fixed income, for a low rate world, we actually saw pretty good returns. High yield was up 7%, emerging markets and investment grade credit up a little over 5%. Higher quality didn't do nearly as well, with treasuries only up 2%. So it was a risk-on market from a return perspective, and certainly relative to a very, very weak fourth quarter that was very risk-off.